Hey, good evening, traders. This is Trader Tim from eMiniMind.com. Today's Monday, September 11th, 2017. Let's jump right into the markets, talking about the week ahead. Pretty standard week in terms of news, in terms of economic news, rather. Certainly a lot going on in the world right now. We got the hurricanes in Florida, Texas recovering. A lot going on across the board. But in terms of market news, this Friday is the quadruple witching, so we have futures expiration happening that day. This week we've got both contracts, the September and the December. December being the front month right now, so make sure you're paying attention if your trading ladder is separate from your charts, that you've got the same ticker symbol up. A lot of places you can just type in the \ES, the symbol, and it will pull up the front month, like in Thinkorswim here. Big day in the markets today, gapping up and almost making a new high, closing above 24.75, that very, very important level that we've only closed above once in the S&P. So very strong day, very good day, healthy day for the markets, rallying from the 24.47, 50% retracement, and the target above us, 24.95. I'm going to call that 2,500 just because it's a big round number, and that should be the next place that we head and start closing in on here in the next couple of days. I wanted to talk about a trade setup from this morning. I'll make this bigger and we'll jump in. So today we had the gap and go from the morning. Essentially how it works, put a buy stop above the first 5-minute candle, and this is the 5-minute chart. Put a buy stop above that first 5-minute candle, enter the trade, and then you can do one of two things. You can trail each candle. Let me shrink this down a little bit. You can trail each candle's low on the way up, just putting your stop one tick below lows, and just trailing your stop until you get taken out, until the candle breaks the previous candle's low. The other thing that you can do that's been working really well lately is to use a little bit wider stop, in the sense that we trail the swing low. So let the market make a high on the morning, let it pull back, and then when it breaks to a new high, then take your stop from the initial -6 and then move it up underneath the next swing low. And then the market makes a new high, it pulls back and makes another high. You would move it from the swing low up underneath the current swing low. And if you do that, you get to hang into the trade a little bit longer, get taken out underneath the high bar of the day, actually, after the market makes a new high and then pulls back. So sometimes you can stay in a little bit longer, and the benefit is you're only placing one trade. It might be a little bit longer than you want to sit there in a trade, but rather than getting in and getting out, sometimes on these gap and go days, excuse me, you can just get in and stay in all morning long. So that's kind of how I play the gap and go setup. You can trail each candle's low, or you can trail swings like I was talking about. Let's take a look at the bigger names in the stock market here. Get a sense of where things might be headed this week. So top line figures, S&P and Dow both looking pretty strong. NASDAQ not quite as strong, but a nice little triangle pattern, bull flag, so looking for that to break out. And then lastly, the Russell, the weakest of the group. If we go to some of the bigger names like Google, not really very strong today, triangle pattern, but looking at relative strength and relative weakness, I'd call Google relatively weak compared to the markets right now. If we look at Apple, we can see, yes, it was up today, nice break above the high of the low bar, but I would have expected it to be up a little bit more, seeing as the S&P made a very strong move. Netflix basically mimicking the move that the S&P made. And then the last guy, Amazon, also weak relative to the market. A little triangle pattern, bull flag, but I would have expected a little bit more, closing lower fairly bit lower on the day off of its highs. Not low compared to the open, but closing off of its highs, whereas the S&P closed near its highs. So I'm always relating everything back to the broader market to get a gauge of where we're at. Volatility decreasing. We've got this swing low back here in the on the first, and if we look at the S&P, we see that the first swing high, the September 1st swing high, was taken out today. However, on the VIX, the swing low was not taken out. So that's a little bit concerning. I'd want us to see a corresponding breakdown in the VIX below the swing low as we break above the swing high in the S&P. So tomorrow, we could end up with a doji day, sort of a spinning top where we have a very tight range, or we could continue with another trending day, get a couple in a row, and make a quick move right up to that 2,500. So we'll just have to wait and see. Live trading tomorrow. You can join in. eMoneyMind.com/VIP is where you should go. And as always, if you have questions, you can shoot me an email, tim@eMoneyMind.com. Thanks, everyone, and have a great week.